Hey everybody, Gary with Basecamp Trading. Let's take a look at some of the activity in crude oil again. As you know, yesterday we had the big sell-off and the commercials were just dumping oil into the market. And this is kind of what the producers do. This is one of the reasons that futures markets exist. It allows the producers to hedge their product or their crop, and of course the Saudis and the Russians and who knows who else. That Friday a couple weeks ago, I can assure you they had already sold into the market, anticipating their own announcement over the weekend. So that initial $24 drop per barrel in oil, they were already hedged in the futures market, making that money back on the downside purchase or the downside selling. And then they play back and forth and take advantage of movements in the market. They sell into the market yesterday, pick up an extra $3 per barrel. This activity right here was probably them buying, turning the market back around the other way, and then they were taking advantage of the long side today, of course. They had the big announcement, shot oil all the way up into the $28 range. So yesterday it got as low as $20, actually in the overnight, $20 and 50-some cents, and they made $8 a barrel back. So they made money on the initial drop. They made $3 yesterday on the drop, made $8 today going back the other way. That more than absorbs the price per barrel that they're selling now versus when they were selling it at $40. They've made that back. But today, as far as the technicals go, we like the 30-minute chart. The volatility has been so high. As you know, the Unirenko chart is really my primary trading chart, but the volatility has been so crazy and the swing so huge that trading the Unirenko chart according to the rules we typically trade it at, we're getting whipped around a little bit and have really been playing this 30-minute chart. The 30-minute chart has been very accurate and giving us some really consistent, accurate signals. And you can see, the 50 EMA has been a big number. Price has really respected that EMA. See, we just bounce, pulled down, pulled back up to it, stalled, finally broke above it. But for today's action, this is kind of what we were concentrating on. We had a bear flag set up right here, had this initial push down, consolidated, and set up a bear flag right here. This bar actually triggered the bear flag to the downside. This bar opened right here up at the top, pushed up a little bit, then pushed down, and then triggered this bar to the downside, triggering this bear flag. Well, it obviously failed, left this bottoming tail. This is technically, you could call that a hammer. It's not the kind of hammer I like because the body of this bar was still selling. But you did leave this bottoming tail right here. And then this bar opened right here, pushed down just a little bit, and then closed right at the top, forming a very bullish bar. And at the same time, this bar caused the bear flag to become a failed bear flag. Often, not always, but often failed bearish can turn bullish, which is exactly what ended up happening today. This was a very bullish bar, opened at the bottom, closed right here at the top. You see it ran into resistance right here at the 50 EMA. It did cause this to become a failed bear flag. So now we're thinking that crude could quite possibly head the other way. Again, very bullish bar, ran into resistance at the 50 EMA, caused the 5 and the 13 to cross to the upside though. Again, another bullish signal. And we left this bottoming tail, failed bear flag, and the 5 and the 13 crossing to the upside. So we had failed bearish, the 5 and 13 were across to the downside, price moving down, set up the bear flag, triggered the bear flag. So we had a bearish chart going at this point, and then we had this bottoming tail, and we pushed up, had a failed bear flag, 5 and 13 crossed to the upside. So now this bearish movement has failed, and again, failed bearish can turn bullish. We pushed up, ran into resistance at the 50 EMA, pulled back, and set up what could have been a potential reversal doji. Had this next bar triggered this bar to the downside, that would have caused the 5 and 13 to cross back to the downside, triggered a reversal doji, and maybe taken prices lower. However, this just ended up being a continuation doji. Price was moving up, very bullish move to the upside, resistance at the 50 EMA, pulled back, closed right back here at the 50 EMA. The next bar triggered it to the upside, triggering this as a continuation doji to the upside. And crude made a nice strong move from there. That failed bear flag actually failed above 23.10, and crude pushed up and actually got as high as 25.66. So a nice, couple $1,000 per contract push on this initial move up off of this failed bear flag. Pulled down. Again, you can see we hit significantly overvalued right here. Again, we know that when we hit significantly under or overvalued on our value charts, that's a place we can expect a pullback, some consolidation, possibly a reversal. What we ended up with a pullback with consolidation and set up another bull flag right here. This bar triggers the bull flag to the upside. We pushed up, little consolidation, set up another bull flag, triggered to the upside, and crude just continued to kind of work its way higher throughout the whole afternoon. This is the big announcement from Russia and Saudis that they're going to start talking, which really didn't amount to much, but shot prices way up here, left this giant topping tail. Body of the bar was buying, but that's a giant topping tail. Hit significantly overvalued again right here on the value charts. Left the topping tail and just proceeded to kind of consolidate sideways for the rest of the day. But again, this is a good example of where failed bearish. Again, we were in a bearish mode right here. Price is moving down. 5 and 13 cross to the downside. The 50 EMA is under the 200 EMA. At this point, this whole chart is kind of looking bearish. And then we left the bottoming tail. Next bar triggers the failed bear flag, causes the 5 and the 13 to cross to the upside. Now the major moving averages are still in the wrong direction, obviously, but crude continued to push higher throughout the entire rest of the afternoon. So again, depending on how you were trading this, we had numerous signals. The failed bear flag with the continuation doji, that was good for potentially a couple $1,000s per contract. The trigger of this bull flag right here, depending on how long you decided to stick through here and where you end up getting out on this big push up, good for several $1,000s a contract potentially. Again, just depending on how you were trading it. But like I said, we've been concentrating more on the 30-minute chart recently because of all the volatility, and there's a perfect example of bearish turning bullish.